I stole your thunder, Anthony.
There you go. All right.
That's a
Yep.
huge responsibility. You got always got to make sure I'm recording.
Always. Yes, always.
That's
I don't
big.
want you to owe us another one. I remember in the old days, right?
I know. I was like, oh man, because I
Yeah.
owe you guys another class.
Yeah.
Oh wow. Okay, so we're officially recording. It's gonna be fun today. At least it's been fun for me to kind of think through how I want to kind of um, articulate or demonstrate. But I want to make the focus on funding an account. You know, there are some ways to do it that are not necessarily in alignment with how you would trade a funded account. Okay. But the way I want to do this is we want to keep it, let's say if it's Apex, how can we follow their business model for our benefit? And this is from the perspective when we're successful, they're successful. Okay, so you got to kind of look at it through that lens. So in a nutshell, we're going to kind of look at how easy it can be to fund an account in a day, and then you use that same model, but you're reducing your size, and you will never, and your goal is to never allow a 30% threshold to ever be exceeded. And so again, there's a little bit of math involved with that, but there's a little synergy there. It's like, hey, if I've got a strategy that's working, to fund an account, and I'm doing it in less time, then that same strategy protecting a 30% rule is also going to ensure I don't have any delays in my payouts, and I have a risk predetermined in part of my strategy. Again, that 30% on any given trade, that threshold, that's a flag in the system, and that can prevent you from getting a payout in a timely fashion. It doesn't end all payouts. Once you make a pure pay period without violating any rules, then all previous payouts essentially are kind of wiped clean. You're good to go. Where this works for me, or at least what I've been practicing, and the psychology's there. And there is a reason why I use 25Ks specifically for this particular model. And it's not bound to that by any means, and I'll explain why. But when you have a target with a risk or a drawdown amount that's 1-to-1, okay, there's your best conditions to enter a trade, one trade, and fund that account. Okay. Now the reality is you're going to blow an account here and there. So part of this strategy is practice. That's why I stress the homework. So I'm going to show you some homework, which again kind of helps validate why this is probably something you want to put in your arsenal, something to consider, and then you wait for certain conditions, and then you execute. Because you're going to be amazed when you kind of, if you get the epiphany that I'm getting ready to kind of show, you're going to say, good grief, yes, I do win, 2 out of 3 or 1 out of 2 on this particular strategy. And so some folks will like the ideas like, you know what, I may invest $33 twice, and say one of those times I'm going to go ahead and get that account funded. Okay. And it may only take once, maybe it'll take twice. But homework, back trading, understanding the math, and why that 1-to-1 target profit to drawdown, is far more, I don't want to say far more. It's just easier on the math. If you use different accounts, you don't change anything. You just, I don't know if I would go try to do it in one trade, or one day. And we'll kind of look at the reason behind that. Svetlana, good to see you. Man, it's been a while. Yeah, so good to see you. We got a great crowd here today. So let me go ahead and share my screen. Any questions on kind of what I've explained? Any questions on why a 25K account is different than a 50, is different than a 150 on this particular model yet? Because the math is most important, because then that's going to give you something that's like, oh, light bulb. And then the risk, because it's not just the idea of being able to enter a trade and hope that you get your target, or wherever you put your stop loss, saying, hey, I'm good as long as price doesn't come back to that stop. We know that's not the case with an intraday drawdown. Okay. All right. What are you all seeing right now? Are you seeing just a kind of a whiteboard?
Yeah, that's all we're seeing is
Yep.
the
Okay.
whiteboard.
All right. See if I can't make this a little bit larger. Hey, where's the font size? There we go. Let's go here to like 26. All right, should be able to read that. Okay, this is kind of the rules of the framework. Kind of want to just get that out. And then so kind of showing you what we're doing. Again, Solana just explaining the objective of today is to demonstrate some of the math behind getting in funding account in a day, why that's important. It's a business model from Apex, but we don't change the strategy necessarily on how we're funding in a day and how we're going to go ahead and continue to trade. So it's not a new strategy. You're not learning any rules. It's just kind of understanding some math and utilizing some of that opening range volatility and to hit our target. Now, what's most important, again, and I'm repeating myself on purpose, is the homework. I've kind of been stressing the homework probably the last 3 or 4 weeks, why that's important. It allows you to like go in hastily, just measure, say, hey, if I follow my rules, the way my playbook's written out, this is how I would have done. And then you can kind of measure your success or opportunities to improve based on, it's like, well, if my homework says I could have, should have done this well, why didn't I do that well? So it just gives you an opportunity to kind of journal, think about it and say, okay, what am I doing or not doing that's preventing me from obtaining the results that if I was to execute my plan per what my homework kind of shows could have happened, what am I doing different? What am I doing wrong? So it's very, very powerful exercise. I think the most powerful exercise out there. And we're going to kind of walk through this setup here. So I really do like the 3-minute chart for the simplicity of on a 25K account, getting in a trade, opening range, funding it being done. The goal is basically 75 points, just slightly over, just because of the fees. Meaning, and I'm using micros just so we could easily convert when it's in a PA status, or once it's funded, you apply the same strategy. You can trade the same way. However, you're going to go, instead of 10 micros on this particular strategy, you would probably do no more than 3. And again, that should ring a bell. Why is 3 instead of 10? Just what's an initial reaction? Why do you think that math works that way? And again, think about Apex, PA accounts, rules, protect your payouts. Okay, 3 micros of 10 is 30%. So if you're trading the same way in your funded account as you are in your evaluation, which is really our goal, we're going to do it in a day, but when we're in a PA status, we're going to then trade the same way, but now we're going to be targeting our 30%. Again, at 30% becomes, we can go more than that on the reward. Well, consistency again is 30%. So you're targeting that what you would obtain in 10 micros to fund an account, pass an evaluation. Well, when it's in a PA status, 30% of that is your maximum daily go. So the math allows us, understanding that up front, protects us, gives us the framework. Is like, hey, I am going into Trade-Evate, I'm setting a max profit, daily profit, or I'm just making sure I've got my target set to where I'm not going to exceed that 30% on any given trade. Because that's pretty easy to do when you start trading, 3 micros or more, in an opening range. Pretty easy to do. At the same time, if you lose on that trade, you're going to lose 30% of your max drawdown. Okay. That's okay, because we're only talking on a 25K account, we're only talking $450. Okay. So that's your 30%. Okay. On one trade, you've not broken any rules in Apex. Okay. So you're done for that day, at least for that trade. That 30% rule is really per trade. However, when you kind of see, we're going to do some homework here, and you kind of see of why this is important. And even with the funding, it's not like you're going to dive right back in and do this again. You want a certain condition, a certain setup. But again, imagine one trade, 6-7 days out of 10, you're going to get your 30%. So you see how we're approaching this to pass an evaluation in one day, and then we still carry over the same trading model into our funded account. One, it defines our risk. It protects that 30%. And it's got such a high win rate that if we lose, we don't care. Because if we do lose 450 on a $1,500 drawdown, and that's what we got to protect. And there's nuances that do exist, because if you get close to a target and then it pulls back again, this is kind of where a trailing stop and understanding how that works is very, very important. You can do some homework and hastily think that you've funded an account, multiple times, or, ended successful, and you realize, no, not really, because of, it being up maybe 500, and then all of a sudden it does, instead of being able to go 75 points below your entry, well, now, might only be 50 points. Once you have an unrealized move towards your target of, say, 25 points, well, now your stop has trailed up. You've only got 50 points of risk remaining, once it goes up to 50 points. So now you're like 2/3 of the way to your target. Well, break even, essentially is a drawdown of nearly $900, and that's another reason today is so important, and kind of understanding the homework is you're going to find in many cases it is far better just to execute the strategy. Otherwise, once you enter, kind of hands off, walk away. But again, that's where your homework is so important, and I'm going to demonstrate that here next. But that's where that homework is so important, because it gives you that metric to have the confidence to say, you know what, good grief, even if this does cost me, $33, a couple times, it's like I go hands off, I've got a funded account. So you got to be willing to say, hey, I am risking $33 for a trade today of real money. It's real money, because the reset might cost you $40, but that 80% off special or whatever, might be a little less. And this is another reason you wouldn't want to do this on, copy trade it. This is where you just start spreading out your accounts. You don't want all your 8 or 10-day cycles or subscriptions to be on the same day all the time anyway. But one a day is I think a great model. Especially when you start looking, it's like, good grief, in this 5 days here, 4 of those days I actually did fund a 25K account. I mean, that's the kind of, even if it's 3, is if you got 5 accounts, if you purchase 5 accounts and funded 3 out of those 5 days, is that a good investment? And then built into that is a confidence that I'm going to win 3 out of 5 trades on the PA side of the house once it's funded. What does that look like? Okay, if we've got, let's say, if our 25K, if I lose 450 on the first day, then my drawdown roughly is, we're just going to say 1,000 remaining. But on the next 2 days, the very next one, I win my 450, and it's actually, I think it's more than that. But let's just say you win the 450. Okay, well, now let's say 500. We're going to go for 500. And that's just, and the reason is I'm very passionate about getting my max drawdown. So now my drawdown is back to 1,500. Okay, the next trade, I just easily win another 500. Drawdown is now really no longer trailing. It's at 1,500. I win the next trade, 500. My drawdown is actually now, 2,000. But I'm really not changing anything until we get up there. Again, it's getting up away from that trailing drawdown. And I think my math's a little off here. We've got to have, you need 3 net wins before your trail down is going to stop. And this didn't really do it. We're down to 1,000. Let's walk through it here. 1, we lose. Okay, drawdown is at 1,000. Okay, then we win. So then drawdown is back to 1,500. Okay, we win again. Drawdown is now at 2,000. Okay, and again, let's just throw another winner in there. The homework's going to be a blast here. So now we're at 2,500. Okay, and that's lose. So that's 3 winners and 1 loser. Okay, that's 75%. But right here, you got, we never do really go over 1,500 drawdown. So really this remains 1,500. And even at 2,500 still remains 1,500, because it's still trailing, until we get to that third net win of, 1,500 plus 100, then all of a sudden your next win, that's where we want to get to. You're not really, in Jake's humble opinion, you haven't really passed your evaluation until you're getting payouts, and your payout leaves you more than the drawdown amount. In other words, you're beyond the drawdown amount and have a payout. That's the goal. That's number one goal. We don't want to deal with a trailing drawdown anymore. Which kind of cool too. I'm going to digress just for a moment. But when we start looking at the intraday drawdown and kind of the homework, there are like Blue Sky, they run some specials every once in a while, and they got some of those static accounts. And those static accounts are really fun with this method because you don't have that intraday drawdown. So it really does take that angst off. The difference is your starting drawdown amount is generally so much less, so you must win, you must have some net wins fairly early in the sequence, or you got to start over pretty quick. But like 150K account with Bluesky static drawdown of 1,000, even if you just target, instead of the 1,500, which we would do in Apex to pass that evaluation, well, in like a Bluesky static drawdown 1,000, you've got a 30% rule even in the evaluation. So your maximum target would be basically like $900, 30% of 3,000 target to pass a Bluesky evaluation. The cool thing about that static drawdown is, okay, follow the model we're going to show here with that static drawdown. Well, you pass an evaluation in Apex, you have a smaller target of 900 with a static drawdown, but now your drawdown is 1,900 versus 1,000. And then you go into day two, of a minimum of 3 days required to pass most evaluations. Is it 5 or 3 in Bluesky? I can't remember off the top of my head, 3 or 5. But again, you can't exceed that consistency of 30%. But you win that second day, well, now you've got a $2,800 drawdown, for a maximum daily target of like $900. So that's just great to know. If people got questions on that, we can talk about that maybe in our next forum and just kind of understand some of the different prop firms are out there, end of day trail down, intraday, and what the differences are. Okay. So here's is this today? Okay, I'm going to switch over because I kind of want to just show a little bit. If we create say this is Ninja. Everybody seeing Ninja now? So I've got MNQ June 25, a 3-minute time frame, and you kind of see the bracket that I've created. I've got a target profit of 300 ticks. Okay, so 300 ticks. Why 300 ticks? Actually, I don't even need to do that. It's going to bring something up here. Why 300 ticks, you say? Well, 300 ticks, and then we divide that by 4. That's 75 points. Okay, so if you've got 75 points times, you got 75 points. Okay, if we're going to trade 10 micros, again, it's a 25K account, so it's a much larger size than historically kind of what we talk about. I love the 1 and 2 micros because I could just trade those all day long and kind of just keep things going towards a larger time frame target. However, a larger size kind of in and out with this particular model. So we got 75 points. That's our goal on this 25K account. Because you got to remember, goal is $1,500 for a 25K account. Okay, any questions so far? Okay, so 75 points. Okay, so that's why we've got the 300 in there. Now I got 310 just because I don't want to have any slippage or commission fees. It's just you don't want to like think, yes, I just passed my evaluation. Oh, I'm at $14.99. And next thing you know, you've blown that account. I've done that, believe it or not, done that. Just I'm like, I can get $1, and you get in $1, it just immediately goes against you, So risk for this particular account is the drawdown amount of $1,500, which again is 300 points for risk. Okay. So that's where we're at. So at no given time during the trade, from a highest unrealized balance achieved, can we ever have a drawdown that's going to be below 1,500. So again, once we're unrealized positive, our original stop is trailing. It's going up. It's changing. So unrealized positive 25 points. Well, now your original stop of 75 points is actually now 50 below that entry. And I think that's just fundamental. Everybody gets that. Okay. With a static account, that's not necessarily the case, but it is on the intraday drawdown. So that's real important to understand. And so that's what I've got here. So just a little over 300 ticks or 75 points to take a profit. Stop loss, again, 75 points. I don't have it trailing here. I don't know within Ninja. I do within Trade Evade. The trailing stop in Trade Evade is actually does make sense with this strategy, because it will always allow, every time you make a new high, that stop does kind of come up. So that is a great visual with the intraday drawdown of having a trailing stop. So that's our ATM strategy. It's set up. And now we're going to try to roll over here at about 5:30 as quick as we can. And what is today? Today's 25 March. Now I'm looking at this time here. I'll kind of stop and slow things down, but I want to kind of crawl through the actual order, because again, let me kind of, well, the homework's going to kind of validate it. So there we're a little bit past 5:30. The homework's going to validate it, but what we want to gain confidence in when we want to pass these evaluations against this intraday drawdown, we can easily, scalp, hit your target, be done for the day. But when you have order size 10 on a 25K account, your drawdown is terrible. That is not a normal size that you really want to trade and continually go for like 1.2 targets. In my opinion. And again, it's just the idea that, hey, I can get 10, 15 points any given time, but it just takes a couple times where it pulls back, 20 points, and that really affects the drawdown. I mean, all of a sudden there's your 30% threshold right there. Done. You're done on that trade. And 20 points again is a very tight stop, unless we have the conditions that we're going to be looking for here today. But again, size 10 right now, we're at around 538. So what we're looking for is we've kind of been a little bit bullish overall the last few days. So we're kind of looking, hey, we've taken out this kind of Globex low a little bit. We are kind of below the VWAP. That's back on the 18th.
Market
Sorry.
filled. Stop filled.
I was like, today was bullish, but I kind of looking again, my overall analysis is already kind of done prior to doing this morning's trade. So here's kind of our Globex high up here. Here we are around almost 5 in the morning. And I think we actually had some news catalysts today also that we really needed to kind of pay attention to. We had at 5 a.m. or 9 o'clock Eastern Standard Time, consumer confidence. But here's another thing that we've got to kind of really keep in mind. So again, it doesn't matter what strategy or trading, whatever, you've got to plan around these. So here's Anthony's pre-market news that he's definitely watching because, and I just say that because it's like I know you're a lot of times trading that pre-market and a lot of times done before the U.S. market opens. So he's watching that pretty close. But hey, 30 minutes after the U.S. market opens, we've got this catalyst here we got to kind of watch for. So that kind of slows you down a little bit from that opening range. And today, if I remember right, it was okay because there really wasn't much. There was really very little decision going on during that first 30 minutes. So we're at 5:07. I can speed it up here a little bit. Okay, so we're really going to go 30 times the speed. But we're still at 5:15. So really that initial news of that consumer confidence right around here, I mean, it was kind of bullish. It kind of took things up a little bit, and then things kind of pulled back to our moving average here. But again, kind of a lower high, but US market still 6 minutes from opening. And what we're really trying to decide here, so here we hit 536. Okay, we are above our, this white line is a 5 EMA and a 20. And I'm continually looking at TradingView. I'm gonna let me pause this real quick because I want to kind of show you what I'm really looking at because I don't have the same type of indicators on Ninja that I can get. This white line, again, moving averages are moving averages, but it's the average of the high and the low of a 5-minute EMA. Okay, again, if you're running just the 10 EMA, that there's still nothing wrong with that. What I like is see this red line. And again, I execute or make all my decisions, all my charting is on TradingView because of the variety of indicators that we actually can have. This red line is my 1 minute 50 SMA. So it does not matter which time frame I'm actually looking at. It is connected and tied to the last 51 minute price actions. That's the moving average. And so I love that 1 minute 50 EMA because it doesn't matter if I'm looking at a 3-minute time frame or the 5. This red line is the same on all different time frames. Okay, but one thing I don't think I've ever really kind of shared, and this is a recent tweak, but I've went in source on my EMA on a 5, my white, and you've got the close open, but the HL2 is the high and the low divided by 2. So it's just the middle. Hey, do you want the high? Do you want the low? Which one do you like better? Do you want the average of the two? So that's all that is. I really like that. So that's what we are looking at. And for the most part, the crossover of this 5 EMA on this 1 minute is something I'm really migrating to recently. You've seen me kind of share, hey, this 5 minute 50, this green, hey, there's kind of my trend. You know, I mean, obviously I got my 15 minute here. We've got our 1 hour down here. Those are always on there. Those are larger time frame trends. But I kind of want to just kind of share, hey, this breakout and close when this crossover of this 5 EMA up over the 1 minute, that's what I'm looking for on this strategy. So it's a little bit different than anything we've talked about, but it's not. You know, when we start talking about that break over or the crossover of this 1 minute, you know, if the 1 minute is staying above this 5 minute, hey, we know we're long. Hey, when candles start closing below this red, you know, with a follow through, hey, if I'm long, that's exit criteria. I don't want to trade against this range. You know, that's just too much of a pullback with an intraday drawdown. Okay. That's what we've talked about as a group over and over and over, right? That's not new to anybody, correct? Okay. But I just kind of wanted to find what I'm really looking at. And I've got that usually set up on my right monitor over here. And I'm looking for that breakout and close of the candle. And it's still very similar on Ninja. We look at the 5, let's see here. So it's just a 5 minute, a 34 and 100. That's what we're looking at here on Ninja. So this white line is a 5 minute moving average. Just like it was, just like it is in TradingView. EMA, 5 minute EMA on a 3 minute chart. And then here I've got a 34 minute and a 100 minute. 34, this could be 20. 100 is pretty good, but also what's between 34 and 100, and it's 50. Okay, so there's just so many more visual, easy on my eyes, and I agree with where I kind of got this from. Again, just kind of another class I was in. It's like, hey, there's a lot of institutions that do tend to kind of gear a lot of their trades, you know, kind of using these moving averages. I can't prove that. I have no idea. It could have been just something that guy's advertising to make money. However, there's definitely nothing wrong with it. And understanding, hey, whenever price is kind of between that 34 and 100, hey, you've got your 50 EMA, which there's a lot of emotion tied to a 50 simple moving or exponential moving average. The 50 is just big. So that's what you're looking at on here. So it's very similar. We're looking for
Stop filled.
If we're going to go short, well, we really want our green to be below our red and our white to be below the green. That would say, hey, you've got bearish conditions. We don't have that here. We've actually got our 5 EMA, you know, it is kind of crossing through our 34, but here's our 50 EMA right in the middle here, or our 100 EMA, and plus our VWAP. I share all that just kind of set the conditions here is like, hey, this is why we've kind of got a bullish sentiment, and that's just got to be done on every trade. And so you'll kind of see that's why we're not in a big hurry here, and things are kind of sideways, but these moving averages aren't giving us any insight yet. Here we're going to 550. Okay, what do we happen to, what's happening, at 6 o'clock? So again, I'm just kind of walking you through exactly how I executed this morning, but I've got the 6 o'clock on my mind. I don't have any sense of direction. I've got a Globex low that's still clear over here. I've got a Globex high up here now. But I like how I've got these wicks kind of coming off of VWAP. That's positive. It's like, hey, is this going to be support? But I still have to wait till past 6 o'clock at this point. 8 minutes is too short for me to get into a trade and then try to get out. Okay, we're at 555, 556, 557, 558. We're hitting 559. Okay, there's 6 o'clock. Okay, now this is what typical of a news catalyst, right? Okay, price moved up pretty aggressively, kind of this Globex high, but here we are at that 3-minute candle, come all the way from 445 all the way down to VWAP, 378. So again, we're just still kind of waiting. However, here's our 100 EMA, and if we can get this price, we need a couple, like a bull candle or two, to close up above our 5 EMA, and we start getting above all three of these, then we're saying, okay, now there's the conditions I'm looking for to take that bullish momentum up. Let me just kind of slow the candle down here a little bit. But this is where I start. When I see these moves off of these candles, I'm wanting to play the follow through of that candle. I'm above so I'll do a buy stop. And this is the opening range play for me. I've got 1, 2, 3, 4, 5 candles bouncing off of VWAP. I've got my 5 EMA. I had this bull candle close, this one here closing above the 5 EMA with my execution candle following through. Okay, so that's the setup, and that's the kind of setups we're looking for every day. And now it's kind of hands off. Okay, I am basically trading $33 of my own real money here. I'm either going to pass this evaluation or I'm going to get stopped out. Now, obviously, if you get a really nice shooting star, clear reversal criteria, if we just cannot make it above this opening range, because this is where it gets, you've got to clear this catalyst here. But again, we got 10 micros, so we're already up $475. It's tempting to quit right there. So I'm still up 235, and my drawdown's down like 300 right now. Okay, now I'm kind of back up, closing that gap. But that's the follow through, this white line, 5 EMA, kind of starting to point up. We're getting these higher lows. We got the nice double bottom, a bounce off of VWAP, bull candle closing up above the 5 EMA with this execution candle right here. That was the reason for getting in the trade. And then we just let it go. And that's a strategy. We've talked about that for the last few weeks in a row. So there's really nothing new there, other than I think that it's the fact that it's a 5 EMA. That is just a way. 10 EMA works great for the same thing. Are you consistent with your trading plan? Are you executing your homework? I want to kind of show the trade here. Because you got your unrealized gain. Our reason for getting in was right here, a 75-point stop loss with just a slightly greater than a 75-point target. If we hit that target, we funded an account in one day, one setting, risking $33 and like 50 cents of our own money. If you get out like at the top of this bull candle, nothing wrong with that. You want to exit in strength. When you have this type of size, on a 25K account, I like to exit in strength. You know, that's where I'll set smaller targets. I hit my target, do 2 to 3 of those a day, I walk away. That is what I do on the majority of my accounts. Exiting into strength means I'm going to maximize my drawdown at the end of this trading day. If I exit on a pullback, then my drawdown, instead of 50 on this account, instead of being 1,500, it's going to be 1,000. Well, a $500 drawdown kind of sucks emotionally, psychologically, even though I might be up $200. But I want you to kind of see this trade here, and where 75 points is the homework. We're gonna go back into trading view right after this trade, but I kind of want to show how a way you can just rinse and repeat in trading view, spanning multiple days, and say, good grief, yes, if I enter based on certain conditions, I just put it in, walk away. Yes, I'm going to win more than I lose. And that's what we're really after, is we've got to learn there is a time to scalp and there's a time to hit your target, get in and get out. When our VWAP's down here and we're bouncing off a VWAP, we're above our 100, and then our 5 EMA comes up and crosses over our 34, those are the conditions that we're looking for. Or what are your rules? That's Jake's conditions. So right here, again, this is that typical, and I've got a few days where I kind of show where I've gone through and kind of studied the same type of indecision. And like, hey, there's sometimes where it's better if you wait an hour, sometimes it's better 30 minutes. There's a lot of times it's 15 minutes. There are certain conditions where I'm playing the breakout of that first 3-minute candle. And that's just if there's a large bullish volume that kind of comes in with the follow through, I'll get in on a 3-minute candle. I got away from that, but until I started kind of looking at the value of, I was like, you know what? Even if I lose, lose a particular trade, when the conditions are right, even on that 3-minute candle, it still wins more than it loses. And that's extremely valuable information. I don't know if you caught that. And again, that's why you journal. That's why you understand, hey, which strategy am I executing today? Is it long or is it short? Where's my VWAP? Are my moving averages? You know, like my 34, this green stayed above the red the whole time, and we bouncing off a VWAP. So we know right then and there, hey, we can only go long. We can only go long. The only condition that would change is if we broke well down below this VWAP, retested the VWAP or this 100 and got rejected. And even then, we still be looking at a double bottom when we've got multiple bullish days in a row. We still got to be cautious. But here's a play from my playbook, 75 point target, and see how that just funded a 25K account. Now let's go into the fun part. All right, so what do I mean by the fun part? So this is kind of where we go into the homework. Let me even kind of share with you here what I've done for March. So here's kind of what I'm tracking for this particular setup. Hey, go, and it brings us right back to our original. I just copy and pasted this earlier over here. That's all this is right here. But again, on a 3-minute chart, I've got my 5-minute EMA, I've got my 1-minute 50 SMA. The goal is 75 points to fund the 25K account. Now, 10 micros is 1 minute. If you got a 50K account, there is absolutely no reason why you couldn't apply the same exact approach and you trade 2 minis or 20 micros. Keep in mind that you don't have that 1-to-1 drawdown to the target ratio. So we start with an ability to protect a drawdown of the full target amount in a 25K account. But it is a little bit less than that the larger the account is. So again, 2,500 drawdown, that's basically 1,000 points. Well, with one micro. But if you're going to go with if you were to use a 25K account, you got a $2,500 drawdown. Well, if you're going to trade 20 micros or utilize the same frequency win rate of, hey, I can get 75 points realized before I ever achieve an unrealized drawdown of 75 points, that's for a 25K account. If we're looking at a 50K account, instead of a $1,500 target, we've got a $3,000 target. And that's where we would have 2 minis or 20 micros instead of one. Okay, so again, 75 points times $40 a point, 20 micros or 2 minis, not divided by 40, 75. You're getting $40 a point. That's where target achieved on a 50K account. So what we just showed or demonstrated in Ninja Trader, if we would have had a 50K account, we would have had 20 micros or 2 minis, and we would have funded that account in one trade. So 1-day trade. The difference is when you start looking at 75 points of drawdown to start on a 25K account relative to a 75-point target, that's a 1-to-1. When you got a $2,500 drawdown, divide that by 20 micros or 2 minis or $40. You've only got 62.5 points relative to your 75-point target. So you're already down. I mean, your risk or your stop loss is 12.5 points less to start with on the larger account. So just keep that in mind. I like this because of that 1-to-1 drawdown amount to the reward. That's where this is really good. When you start looking at what we're going after, I'd have to back test it and kind of study a little bit more. But hey, maybe I just plan in advance. I'm going to still stick with one micro and target 75 points on day one. And on day two, I plan on funding that account. That's a way. But you got to understand that risk, that drawdown amount to that target amount, when it's 1-to-1, gives you a little bit more of a cushion, more flexibility to work with, to try to do it in one trade, because you do have price going up, price coming back down, price going a little higher. We hope it's going to come back down. Hopefully it's a higher low, and then a higher high, and then a higher low. But the size of those candles, while it's grinding up, that every bear candle, is affecting that drawdown. And if it does ever exceed, 75 points from the highest unrealized point, game over. And when we do homework, we got to kind of look at that. Here's a summary of March. Again, shorts and longs are all in there, but here, to me, this was really the one clear loser. If you wait 1 hour, then there's a short kind of based on the pre-market news. And again, there was a strong bias of the pre-market news that probably would have kept us out of this trade anyway. But here's a clear loser. So when we get to 12 March, I kind of want to keep this in mind, because this is, again, another one of those strategies where if you lose, you turn around so many times, 30 minutes later or an hour later, you just get right back in the trade and it's good to go. Of course, if you're if you put 10 micros on a 25K account with the intent to pass an evaluation, you got to kind of go back to probably, at least what I'll do, like today, I was gun shy, didn't stay in for the full 75 points. So I had to break it up into two smaller trades to finish getting where I needed to get. And so I just waited for this pullback. I waited for this crossover, and then boom, I was back in there for like another 25 points. Got out, could make a higher high, and again just got in at this crossover again. We're bouncing off of our 5-minute candle close above my white lines, above my red, then again a few more points. Wait for the pullback. Again, white crossing up over this red, then in for the big haul. This is right here is where I maximize my drawdown on all my accounts again. I'm digressing. But homework, just create your little spreadsheet. And then you want to track, hey, on a short, my white was below my red. So R first means red is above the white. That's just code for me. My white, I know, needs to be below my 100 or my 1 minute. My 5 EMA is the white. My 1 minute 50 SMA is the red line. So if R is first, that means it's above. If the W is first, that means it's first. It's on top. So short or long. And here's actually the kind of the time frames, because what I want to look at as I collect this data over time, I want to say, hey, am I missing out on a lot of trades if I wait 15 minutes automatically? Or does the data, historical data, say, hey, there's just as much opportunity if all the conditions are present to play the breakout? And that's where being able to track, hey, when did you actually enter the trade to be able to, because here's the actual points achieved. And that's another thing is, as you look at, it's actually went up to 170, 189, 95, 150. Keep in mind, we only needed 75. But I went ahead and I'm tracking. I'm like, okay, of all these days, how many points did I actually get? To me, that's an important metric. Over here, I just kind of put them in. If there's some large candles in there, I'm like, well, how close or how much drawdown did I really have? If it's blank, I just never did come close to having a concern about the drawdown. In other words, it trended really well. Sometimes the trade went pretty fast. But here is the actual drawdown, like a bull candle coming in. It kind of reversed, like 64 points. From a highest balance achieved before we made it to 78 or 70, 75, there was a big bear candle or a pullback of over 64 points that I actually did have to stomach. But I'm like, okay, but it worked. So how many trades is this? This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 17 trades. So 16 of 17 trades were actually have been successful in March, kind of following that. Now, every day's got a little bit of different start. Doing homework. So there's definitely a prejudice to, do we really trade that good? I don't know. That's where homework is so valuable. So here's what I've tracked for March. And now we want to kind of go and say, well, what's my homework look like? How do I validate that? So again, I'm kind of back to a 3-minute time frame. And all I've got to look at is everything we talked about this morning, when we kind of ran that through Ninja. First 3 minutes, hey, VWAP's down here. Here's my 15-minute. So we're bullish. So we're kind of expecting, we kind of want to see a natural pullback. What we got to wait for is, hey, is it going to continue or is it going to come down here and find support? And so confidence to me, especially after this news catalyst, again, a beautiful reversal off of this news catalyst. First candle closes above my white, and plus my white came up here back down. So I've got higher lows on my executing or my small moving average. That to me is all I'm really looking for. So here's bounce off VWAP. It reverses. So here's my reason candle. And then here's my confirmation candle. This is my execution candle. When this wick comes down and starts coming back up, I don't actually enter that order because when we're able to watch this in real time, I'm actually not entering the trade until this price is actually down here. But when it comes back up above the body of this candle, above my white line, I'm above my red. That's the conditions I'm looking for. And then all I'm doing is saying, hey, and I've got my bracket order all set up. I'm like, can I, up to the top part of this candle, do I get over 75, 76 points? And I definitely get that even right here. So that's the kind of data that comes over here. Hey, it actually went all the way up to 83. I did kind of have a pullback here of around 36 point, actually from this high, this wick down to the bottom of this wick. That's the drawdown that we have to stomach on an intraday drawdown. So I just kind of like, how big is that from the top of this bear candle right here down to the bottom of this candle before she looks back? That was around 34.75 points. So I got 36 here. I am going long. So white above red, above VWAP, and 5-minute 50 SMA. That's the conditions that I need to look back historically and say, hey, what are the conditions I'm looking at and how consistent are they? Is with all this chop here, do I have enough conditions met to enter this trade? Again, I'm above VWAP, above my 5-minute 50 SMA. White is breaking above red. So then I try to keep these notes the same, and then I can look at how many of all these trades, how many of them are just these conditions? How many of them are, red is above the white on the shorts? And this is how you start wiring your brain to start recognizing what conditions are you looking for? Do you have a reason to get in that trade? And if these conditions are not met, then that's where, hey, maybe waiting an hour is probably going to benefit you more in the long run. And absolutely. There's days when that's the case. So homework kind of done on this one here. We just kind of go back, see what's it look like yesterday. Very similar conditions. Okay, pre-market, beautiful trend. US market kind of opens. You got 3, 6, 9. We bounce off of our 5-minute 50 SMA. You got your kind of your pre-market highs right here. No candles closing above that. We're way above our white anyway, but remember at this point here, our white is still below our red. We don't have that high or low or that follow through yet. And beautiful enough, we're waiting because it's coming down. And again, it bounces right off of this 34 SMA. Is that a 5 or a 34? I think that's a 5. Yeah, that's a 5-minute. So 5-minute, beautiful bounce off of that. Now, this is actually a wick comes up. I don't know, not sure why this candle is showing up here as a full body with the next candle opening here, but this is actually a bear. I'm sorry, a hammer. So it comes back up, and now we've got just a beautiful hammer here. I'm not sure why that's not showing up real clear here. On a 2-minute time frame, you can kind of see it. Again, getting rejected from this pre-market high, comes back down. This candle wicks up, opens here, and then continues back down, bounces back up off of our 5-minute. Now we're up to looking, hey, is our white crossing over our red? And so back on that 3-minute time frame, here's where the conditions are to get in. I've got a hammer right here. I'm waiting this price action here, kind of the wick coming up here, and this wick coming back up. That triggers me in right there. Okay, where is 70, 75, 76 points? We get that about right in here. So right in here. So that looks like a winner initially, but now we've got to ask ourselves, okay, how much drawdown did we really have? If we would have stayed in the trade here where we've got a long trend, but you can't take credit for the trade or your homework if in fact your drawdown here exceeds 75 points. So you can see here on a 25K account, we're still alive. We funded this account again. If this would have been a 50K account with 2 micros, remember that 62.5? That would have, if you would have stayed in this the whole time, that would have failed that evaluation. That's how close it can be from time to time. What's pretty cool about here is, hey, okay, I've got following my rules, this strategy. I've got Tuesday, I've got 25 March and 24 March. Okay, it's a win. And here we are on last Friday, 21 March. Okay, pre-market, big move down. I can't remember if we had, I don't think we had any news here. Big crazy wick. But I've got this hammer here in the pre-market. So this becomes very key area. I need to see this, a breakthrough here, a retest and a rollover before I'm going to go short. But we got another wick, kind of an inverted shooting star here, but look at this area right here. And now we got this green indecision. So now I'm like, okay, VWAP's clear up here. I got kind of me a double bottom. I am actually looking at getting in when this candle comes up and takes out this bull indecision with this hammer over here, kind of this double bottom. That's some of the conditions I'm looking for. If I wait for this to close, I want to see how much of a pullback do we got here. And then when this wick kind of comes back up, we could get in anywhere in here. You know, you can play above that, but I like to see the fact that this bullish candle, I waited for it to kind of bring up my EMA. Here's my reason. Here's my confirmation. Here's my execution candle. So the retest, this little wick, it kind of comes down, but as it comes back up anywhere in here, I'm looking at getting in. And do I get well over? Again, we hold it all the way up to 132 points. Here's 94, 82. We're just shy on this wick right here. So let's look at this. We didn't hit target here and we stayed in. We got to ask ourselves, I got 90 points there. Okay, so that, if we wouldn't have hit our target here, which to me looks a little short, then we had too much of a drawdown here. And this is where a little shy of VWAP, when this candle closes, that's an ugly shooting star. That's where we got to protect ourselves. What day is that? 21 March? Yeah. So that's that one there is kind of gray. And that's where, do we want to get off? Do we want to enter this far up above our white, or we want to get as close to our EMA as possible? I want this closure above my white. It's a strong follow through of this indecision candle right here. We want to try to get in as close as we can to this EMA, but this one's kind of gray. If we get in at the top of this candle, which is my preferred entry, that's really what I'm looking for. I'm looking for this here. If this is my reason, confirmation. When this wick comes up, I'm looking to get in at the top of the body of that candle. If we do that, we're just borderline, right? right there. When you're, man, a tick might be a tick short. Might be a tick short. And the only reason that's very important is because of the drawdown that occurs from the very tip of that to the bottom of that. We've got to take some profits off the table here, or you're going to lose that account. But right now this is the 21st, so we're 2 for 3. Let's say this is a loser. So I'm going to chalk up 21 March. We're going to call it a loser. But we're going to call it as a learning opportunity. We don't lose in trading ever. Any questions so far? All right, so I'm jumping back over here. And here's another thing, as I study this 5 EMA kind of crossing over, I look at 1, 2, when I've got these retests happening here, I can be aggressive at getting in on these. In other words, sometimes I think I actually have gotten in above this indecision. I think I come in and I kind of clear. If I clear these candles here, I'm known to get in. I'm just trying to I want to validate candle closing above my white line, retesting, getting in. If this wick comes back up, then the body of this candle here is where I'm actually getting in. Because maybe I want to wait to trap these bears right here. But the closer we can get down here to our moving averages, the better. And the reason being this intraday drawdown, that's the challenge with Apex. That's a challenge with any account when you're really trading a larger size than what's appropriate for that account. But if we come in here and then in order to take profits here, we got to realize that this is foundational. Is boom, 41 points. Okay, which is not terrible if you have a consistent strategy to get back in. But when you start looking at 41.5 points, you know, at $20 a point, that's $830 drawdown of 1,500. So you're getting out and you got 50% of your drawdown. So you have to kind of accept that hey, that's going to be the case. But here's kind of the way I did it this morning. I did not stay in all the way up, but this is where, okay, I'm a little bit short of VWAP. Take a little drawdown here, but it's like I'm not ready just to lose this account. And plus we know that a retest of this area is very valid. Well, all we're going to do now is wait. I got this closure above my 5-minute EMA. Here's a retest. Getting in and back at the body of that candle. We'll back up to the tip of that. Well, there's another 54 points. You know, so that right there becomes pretty valuable because we got 54 there. And let's say if we didn't get up into here and we exited there, so we went all the way up here, but we lost that. Remember, we were like 74 points up to here. So we had that drawdown of around close to 42, 41 points, but net 54 plus 32. So again, now I've got realized gains. I just passed that evaluation, but it took 2 tries. Today's objective is to kind of show what your win rate is if you just get in the trade and kind of stay in there. That there is some value to that. One and done. However, and this strategy works great when you don't have that trailing drawdown. But once you get your first payout and you no longer have a trailing drawdown, hey, as long as you're bullish and staying above, things can change a little bit. You know, we can be a little bit more lax. But this drawdown right here is something you really got to pay attention to. You got to make sure you're journaling that and kind of keeping track of, well, do I really want to go against a shooting star? So here's a condition right there where we might not. So that's our loser. Okay, these are the ones that I really do like. and I dive into these pretty quick. Big bull move coming down. First 3 minutes, we come down and we get this wick right down into here. And this wick right here, it tells you that, hey, there's big buyers that come in and snatch this up right here. When I get this clearing of this first hour, almost this first hour of the pre-market, this large body, I take the follow through on the 3 minute right there. There's more times than not that follow through is going to give me 75 points. And this is one of those where it really worked out well. It went all the way up to 262 points. But our 76 becomes right there. So we're done. We enter here about 4 minutes after the market opens, and we hit our target right here. We're done in 15 minutes, and we just funded an account. I'm above my white's above my red. I get in here, the follow through above this 1 hour 50, above my 5 minute, and I do know there's a high probability of this VWAP's always a magnet. So so VWAP is 1. This wick kind of correlating to this Globex low over here. A lot of fair value gaps. That was a big move down during the night. So big money come in. So I've got like 4 or 5 different reasons I'm getting in there, besides the fact that my white's closing is now above my red, but I've got that follow through, strong follow through. So that's on Thursday the 20th. Then we jump over here to the 19th. Very, very similar condition. Okay, we've got our 50 minute, I'm sorry, our 1 hour 50 SMA up here. Pre-market, first candle opens, gets rejected from the 1 hour. Big bull candle kind of comes in. Now we're below our white's below our red. Kind of a little hammer right here, so it can be a little tempting to go. Again, really, when we kind of see this hammer, we're looking at, hey, any place in here could be good if it goes long, but we got another bear, and then we have this follow through. Okay, we've got a lot of room for it to move, but now you got this big bull candle that comes in right here. This almost identical. Look at this setup here. Where did we see that before? Well, we seen it like 2 trades ago. But this is on the 19th. And again, just doing my homework. I've got my pre-market. This is our liquidation right here. We're kind of looking left. Hey, this is a lot of big money, strong buyers coming here with this wick. And it does kind of correlate with this pre-market low here. It could go down more. If the buyers are not happy with the price they get here, then we can expect a rejection for it to come back down and retest this area again. But this is such a bullish move. White is now above the red when this candle closes. So here's my kind of bullish reversal. Here's my reason. Here's my confirmation. And then my execution. Execution is this candle here. It retests, comes back down. When it comes back up to the body of this candle, I'm taking the follow through. And again, there's over 111 points. So just funded another account. I'm gonna do one more. And this one's a little bit different. And this is where, okay, we're looking at our 1 hour, but our VWAP just trends down all night long. pre-market rejection, rejection, rejection. Still pre-market happening here. But here's our 1 minute and our 5 minute. We just don't know how far down is it going to come. But this is where, when I see this type of alignment of moving averages during the pre-market, we don't have anything indicating that there's very many bulls interested in stepping in. Especially when we kind of clear this area here. So now we're looking at, hey, here's our next real strong area. And if we were to drop I don't know if that's going to be correlated to that time frame or not. But here's where we got to kind of look left. Got to kind of watch this area here. But I'm diving in generally right in here. A little hesitant to get in here. But again, beautiful follow through. Once that gets trapped, you can do either or. The beauty of it is you can be fairly patient. And if you got in right there, well, there's, again, 75 points is right there. It's that quick. If you got in here, well, your 75 points is clear up there. So again, I believe previous days we've been dealing with a little bit more bearish sentiment overall. So this is just as easy to go short here as it is that follow through on that bull, going long. Again, what is your overall strategy? Again, this is why you've got to journal. And here's my notes on 18 March is, and say, hey, got in following that second 3 minute candle. It was good for 110 points. And basically I've got my red is above my white, or my white's below my red. And that's really all I did. It was just a clear, I'm below VWAP. I'm below all my moving averages. It's just a clean setup. It's a clean setup. So that's every one of these trades, we got to look at it here. If we get in here, this candle closed here. This is when it went up, and then it comes down. Okay, so without going into the 1 minute, we don't know for sure, but we just don't have any condition where we look at a drawdown as a concern in this particular trade. And as you do homework for this particular strategy or these intraday drawdowns, you have to look at the maximum amount of drawdown or exposure you had when you're staying in. And then when you start getting 30, 40 trades, kind of journal, doing some homework, then you make a decision on, hey, have you rehearsed your playbook? What are those conditions you're looking for? And when we start looking at, say, 15 of 17 is pretty cut and dry, that's not a bad odd to want just to fund a couple accounts. Okay, so accounts funded. Let's say it took you 3 days. Say it cost you 2 accounts, but you got one. I would not execute a strategy that was only anywhere near 50%. I want it to be a lot more than 50% when I'm able to go in and kind of see what it is and define those rules and those conditions. In other words, the 50% to me is not quite enough. I want that 75 or greater, because I know I'm most likely not going to trade this good. I have to really grow into really trusting that 5 EMA. I've got to make sure my pre-market analysis is, how confident am I with that pre-market analysis? But when I can go in and do homework and create these type of results, then I start practicing it via simulation. And then I just continue to look at day in and day out. And then I begin to execute. But now we want to look at things a little bit different. Let's say you maybe like this opening strategy, because for the most part, we're done. I mean, the 30 minutes, we had to wait 30 minutes here. Done pretty quick. So that's really just an opening range strategy. The big difference now is account is funded. What are we going to do? This is where, hey, we're not changing anything, because even if you do have a copy trader, like Sean, I know you're not able to join us tonight, but and Anthony, I'm not sure if you use a copy trader or not, the Apex copy trader. I'm not sure.
Sometimes I do, but I try not to do any more than 3 accounts at a time. Just because, so here's one thing I found. So there's a way to test your computer to see about slippage. I'll look and see if I can find it where you can test to see. So it's Apex has a thing, they partnered where you can purchase a trading computer, but there's other computers you can buy that are not as expensive. But if you've watched before, I mean, for me, I know a lot of times I will try and get out of the trade to reduce the slippage versus if I let it, let's just say it hits my stop loss, but I know that there's a huge slippage involved. So, when I'm looking and thinking, it's $200, but then when it's finished after the slippage, it's 80, then there's a problem.
Yeah.
So I try not to trade more than 3 accounts at a time.
I agree. Where I avoid the copy trader, it's not so much number of accounts, but it is the type of trading I'm doing. If I'm getting into a trade where I know I'm going to stay in longer and not sit there and scalp, then copy trader historically for me works wonderful. It's very consistent. Many accounts to the penny are the same. Not all of them, not all the time. But where I really have an issue with the Apex copy trader is if I'm scalping, because in and out, new trade in and out. If I just have that one lead account in Trade-Evate and I've got, 4 or 5 accounts on the Apex copy trader, it's not a matter of if, but when. Not all of them are going to get closed out properly. And next thing I've got stuff going both directions,
Yeah. Yeah. And I've had that happen a couple of times.
So scalping's an issue. You can scalp.
Yeah.
I have no issue if I scalp once, but then I need to kind of like reset everything. Toggle everything off, toggle it back on. Then I can go in and like scalp again. Then I'm a little more comfortable. And you might be able to do that even multiple times, but I run into issues when I overtrade. If it's larger size, maybe 5 points or 10 points multiple times. And if I'm copy trading, I'm going to run it. Most likely, those are the conditions where I run into an issue with the copy trader. But if I've got everything set up, I've got my reason presenting, and then I get a confirmation, and then I'm ready to execute. Copy trader works wonderful for that, because then I'm just staying in until I hit a target. And copy trader seems to work really well. Copy trader within Trade-Evate is hands down the best when all accounts are the same size, when you're trading the same size on all those accounts.
Yeah.
The problem is you just got to be quick to place your targets manually and your stop losses manually, because you cannot use a bracket order when you're copy trading within Trade-Evate. However, the type of trading we're talking about here, again, it works great. If you wanted to do 2 accounts, you can. The challenge is the size, so my size on an evaluation account is, hey, I win 3 out of 4 days, or even 3 out of 5. I'm building that database for this particular 75-point strategy. I'm just calling it 75 points because, like, hey, I think some folks are going to want to be able to say, hey, wait a minute here. There is a way to where 2 out of 3 days, I potentially can fund an account. I really think if you practice it, do the homework, and wait for that specific setup you're looking for, which presents every day. We just don't know exactly, is it at 3 minutes, 15 minutes, 33 minutes, but it's there. Very seldom do we not get a 75-point move, within that first hour. It does happen. By all means, it does happen. And that's, again, where you're going to have a couple losses, but some folks are, if they're wired like me, it's like, heck yeah, I'll spend $60 to even fund one account, meaning lose two $30 accounts to get one funded. To me, that is a great investment, because now we're going to wrap up here, but I want to show you, I want to at least make sure you have the information to digest and understand the math between the same strategy, but now we've got a 30% rule, not only for winning within the funded account, but also our risk. So if we're risking with 10 micros, okay, we understand that 10 micros is $1,500 risk at 75 points. Everybody understand that? Okay.
Yes.
Okay, what is 30% of 10? Let's just do the math. 0.3 times 10 is equal to 3. Kevin, you can do that on your hand, right? 3 of 10. 3 of 10. All right. And that's just important. I mean, because it's not a third, but it's 30%. So 30%, 0.3 of 10 is equal to 3. So what that tells us is, hey, if I was to still apply my 75-point objective, and that's just, we're going to call this a 75-point kind of funding strategy. It's just a way to, within the framework of everything this group has talked about, our strategies with scalping, staying in for 1.2s, utilizing the moving averages, 10 EMA, traps, closing above a moving average, whatever your strategy is, I can trade the next day multiple accounts, but all I got to do is change the size. So if I've got 0.3 or 30% of 10 micros means I've got 3 micros now. Okay, is $450 risk at 75 points. Let me make sure that's right. So if I've got 3 micros at $2 a point per micro, that's $6 per point. You guys tracking that? 3 micros, $6 per point. So $6 per point, that's 75 points. See where that 450 comes from? So you got the same stop loss, you got the same entry, and you got the same target. Now this becomes a 1-for-1 risk to reward. But again, we're basing this on the fact that we have a 1-to-1 drawdown amount to our target amount, on the 25K account. So that's the reason a 1-to-1 risk reward is kind of natural here. If we were to go with a 50K account, well, we would have to reduce that risk. Well, it becomes naturally kind of a once you're in a PA account, again, it becomes irrelevant because your target, actually, this is a good revelation. When you have a funded account, 50K, your drawdown is 2,500. Your initial target for a payout is 26. It's that 2,500 plus 100. Or should I say 2,500, $100 over that initial balance of 50K, the 2,500, that drawdown amount is the target for your first payout of 50K. So it really becomes it really becomes a one-to-one drawdown to account balance profit, you know, one-to-one in the 50K in it once it's a PA. So it becomes essentially the same. But on 25K, 3 micros, execute the same exact strategy, 75 points, you're going to make $450. Okay, well, what does, again, net wins, but $450 times 8 net wins, and I'm just saying 8 because that's the minimum amount of days for a payout. Well, that's $3,600, but the maximum amount you can actually take out is $1,500. So you're going to leave, you know what, $1,900 in there that you can't even withdraw for the first couple months anyway. So trailing drawdown's over once you have 8 net wins, not 8 wins, but 8 net wins. Okay, so if you're win 2, lose 1, okay, that's really 1 net win in 3 days. Win 2, lose 1. So that's a 66% win rate. But even then, if you're looking at, let's just say over 10 days, that would be $4,500. But let's say 3 of those 10 days, you're losing $450. So then you've got that's still netting $3,150. You know, that's winning. That's if you have a 70% winning rate. So still drawdown's good. I'm digressing here. What I wanted to show is 30% of drawdown in a single trade is a rule violation with Apex. So that's where that 3 micros is critical here if you're following the same modality. Now we're talking that threshold of 30%. It's a pretty much a hard rule, but it doesn't mean you're not going to be able to get a payout. But it's very possible that they could deny a payout. Okay, so then you just continue trading. When you have achieved another payout period and met all the criteria, then you can request, you know, a payout for that new period. You still may not get the funds from that initial payout period where you have the rule violation. But, and this is not real clear on their website, but that third payout has now reset that violation from the money that still may be tied up in your account from the 30% rule violation from the first time you achieved a payout. Once you got your second 8-day period, request a payout for that amount only, that second payout where you did not violate any rules, you'll get that payout. Then you don't have any restriction on those funds from that initial payout where the rule was broken. That third payout, now instead of requesting like a $500 payout, you can request whatever you earned on those 8 days, plus that other $3,000 that might still be in there from that first denied payout. So I just share that because that's it's important to know that you're not losing that money, but we got to respect they're promoting a 1-day passive evaluation, but now when it's funded, hey, do not trade like you did in your evaluation. You have a 30% threshold, and that's your risk on any one trade. Now, you've also got the consistency of 30%. So again, if it's a little bit more, because if you're going to go up to, well, it's not real, well, of your 8 trading days, X amount of days must be winning days, but no one day can exceed 30% of the amount you're going to withdraw. So it's greater than 450. But what I want to kind of show is executing consistency in your trading plan with that 30% drawdown threshold. Well, if you apply that to, hey, if I hit 75 points, $450, again, when we're talking a 25K account, that is a huge win. That's a huge day. Because if you've got a 50K account, you would be talking over $800. You know, again, 30% of that $2,500 drawdown. So again, you just scale it. So but 450 or 30% is a huge winning day when you times those by how many of those winning days do you have in 8 days or 10 days? And if 6 and 7 of those days are winning days with a 30% profit on all your winning days and no more than a 30% loss on a losing day, you're going to pay for some live worms instead of fake worms when you go fishing, Esley. I don't know if you fish, but I'm just saying you can buy the real stuff. Again, this is, I hope it's elementary and fundamental, and I hope you guys are so bored because of what I'm talking about is so simplistic. But I think it's just so important to always go back to the fundamentals. I want to be able to trade an evaluation and a funded account. I want to trade them the same. I want to train my brain to look for and recognize ideal conditions where my win rate is 60 to 70%. I know what my target's going to be. I know what my risk is going to be. And now I can start planning on, I know what the next month is going to look like. You know, the day of tilting or, you know, giving back more than that 30%. Why? If you just lost 75 points, you were wrong, you know, but yet, you know, that 6 or 7 out of 10 days, you're right. Let it go. Let it go. Don't get frustrated and chase it and try to get it back. I've just done that so many times. I have a problem because I can sit here during the entire duration of the market. So I can go to the gym and get my workout in at 1 o'clock when the market's closed. And that actually probably cost me more money than if I said, okay, I've only got 2 hours. I got 2 hours. 2 hours, I'm either going to win 30% or I'm going to lose 30%. But I'm going to win 30% 3 or 4 out of 5 days. You know, 6 or 7 out of 10 days. I'm going to lose 2 to 3 out of 10. Dang. But reality is when you start talking controlled risk, consistent wins, consistent losses, you're adhering to the business model of your prop firm. When you win, they win. And you just now implemented a strategy that's completely going to protect you from violating any of their majority of their rules when it comes to, are you worried about getting a payout or not? So that's what I had for this week. Do some homework. Make sure your trading plan is tight. You know, if you can come up with where say, hey, if I do this, then here's what all my historical data, my homework suggests will happen. There's no guarantees that homework is going to guarantee future results, but there is no better tool out there than to give you an edge and provide a model that is going to be somewhat in the direction and in the area of your homework. And again, you've got to be honest in your homework. You know, what I really got in there? You know, do I execute there? Do I wait for that candle to close? Am I getting in? You know, if the execution candle does retest, it's coming down. Am I getting in at the close of my confirmation candle or the wick? And what I mean by that is you've got to decide, are like this area right here. Here's my reason. Kind of looking left. I like this wick. To me, this is indicative of overall bullish sentiment, large buyers coming in. When this big bull candle comes in, traps these bears, is even above this hammer. I'm above my VWAP. I've got my fast moving EMA above my slower moving EMA, let alone my 5-minute. Reason, confirmation, execution is this candle. I have not entered the trade immediately when this candle closes, but when I see this come down here and I see the bears, that's the time where I'm looking, am I going to get in at the body or the wick? And that's just something you've got to look back and decide. If because of this body is trapping any bears that were in here at one time, these bears and these bears, the body, absolutely, in this condition. But if this body happened to be down in here and this wick was like with these wicks, that's where I might enter above the wick. So again, are you consistent with how you're getting in the trade based on your execution candle? So for me, I'd be getting in here because of the body of this candle is actually above these. But I'm not actually hitting enter on the trade until I don't want to get wicked in here. That's really what I'm getting. I don't want this wick to get me in this candle. I'm avoiding these wicks. This wick is slightly higher than this one here. What if it rolled all the way down to here? So just because I got a wick here, I don't go and enter right above this wick, because it comes back down to here, it comes over here, it wicks up, wicks me in, then it decides to come back down. Okay, it's bullish, it would have worked, but not always. And I don't want to get wicked in right here, because this wick is higher than this wick. So I am not in the trade at all on this candle when it opens. And even though there's some follow through there, I really do want to see that retracement. Once I get below like the body of this candle, anytime it's down in here, now I'm like ready to enter my order. Now, if there's not any like retest and there's like immediate follow through, then I'm diving in at the top of the wick. Because that's even a stronger bullish confirmation, is if there just really is no wick here and it immediately starts following through. Well, that's I almost call it slippage, but in a sense it is. I want to get in here, because if when it comes back up here, then I'm in. But if there is no retest and it comes over here and just starts following through, well, then I'm not, in my mind, my rules say I'm not chasing if I'm still getting in right above this candle. Because how many times are we going to get the fault, like right here? Okay, I'm like, okay, I've got a retest. I got my 1 hour 50. Well, there is no retest here. It comes straight over and just continues following through. So that's where you've only got, you've got from here to here to, here's where you'd like to get in, but you may not get filled because there is no retest here. It is a direct follow through. Well, here's where you've got an opportunity to get in. So that's kind of what I mean by that reason here, but confirmation, but I don't I want to see a little pullback and then get in at the body of the candle versus the top of the wick. May not seem like a lot, but again, that's still, 797.25 versus 786. So that's 11 points, on 10 micros or 1 mini. Okay, that's $200 difference. And that's what you got to start looking at. However, nice pullback here, but this is just a beautiful setup. And this is such a beautiful candle that carries with it so much momentum. And then when you get a opportunity, this goes back to just old-fashioned 10 EMA right here. This candle right here, another reason we got to be a little cautious is because a real quick bull move can result in a real quick bear move. So you got to be truth in your homework, truth in reporting or whatever. Hey, are you doing above the wicks or the bodies? Or you find out, hey, when I do maybe 2 or 1 or 2 out of 10, 3 out of 10, maybe they are just the follow through here. You have to look at that, but make a column and kind of note that wick or body. Was a retest valid? No follow through. How many times do we not have this retest? Here's another beautiful retest. It comes up, not much of a wick there. I mean, immediately there, it appears that it's following through, then she rolls right back over. But a big move above your 50-minute, plus here's your kind of opening range, initial high. This is the best we can call a retest of this opening high or the 1 hour 50. That's your retest. Okay, it comes back up. Now I'm getting in. And again, just carrying that momentum. So here's a reason. Here's a reason, or here's a reason with execution being here. So, but that's the way you got to look at it. And then when you're kind of keeping track of and trying to identify what are the nuances, what are the difference, just got to create different columns in there. Hey, how many times is it just a matter of the white above the red, I'm above VWAP, I'm above my 5-minute 50 SMA? How many times are these conditions true? So I use the same verbiage so I can come in and just count how many times. Simple conditions, that's what I'm looking for. Hey, does that actually give me 75 points more times than not? And when it doesn't, I want to know why. Oh, okay, maybe it was my 1 hour was right there, or it was that pre-market, 150-point candle, and it shot right up to the top of that, but there was no follow through, then a quick rejection. And that's where those news catalysts, especially pre-market, can become really valuable, because I'll probably see more hindrance to my generic entry criteria if I've got one of those candles in my way. And those candles aren't every day, but something I have to make a note of. Matter of fact, I think right here. So white broke over red. It was a 3-minute hammer. It bounced off the Global X low, the target, to pre-market, high news. Second entry, 150 points if I take 1 hour. So let's just look at 7 March and we'll finish up there. You guys need to tell me to shut up because you got to go eat dinner. So 7 March. Okay. Here's a big news catalyst. This is like 4:30 Alaska time, 8:30 Eastern Standard Time. So clear, didn't even make the high up to there. So this is one of those. See if we get in right above that hammer, which this is, I'm going to get in every time. I'm going to take that trade. And that right there is 130 points. But I was able to see 75 because I see 75 well before even retesting this Globex high. Again, that's another reason it's kind of a no-brainer. But we're coming in. I've got here's our news catalyst low pre-market low establishes that as support. I got 3 minutes, 6 minutes. My white's still kind of below my red, but this is what brings it up above it. So wicks up into here, I get a hammer. So kind of support. So here's kind of my reason I'm looking at here to include this. Here's my confirmation candle, hammer, 3-minute time frame. Closes here, shoots over here, it starts rolling back down. This 1 minute 50 SMA, let alone my short, fast 5-minute EMA, is support. So absolutely taking that every time right there. So I was just kind of looking at it. Bounce off Globex low with target prior to pre-market higher news. Okay, so that makes sense to me now. And that's why keeping those notes in there, it's like, okay, my notes are a little bit different. Why are my notes different on this trade versus the others? I'll just go back and look at it. Support at pre-market low, target well before I hit the pre-market high. Hammer, 3-minute time frame. Momentum of my short-term fast-moving EMA right here, breaking above my red. So my conditions are met. So I'm going long. So that's the beauty of notes, because then instead of sitting there doing homework all the time, then you come back, hey, I got an extra 10 or 15 minutes, review your homework. You know, right there, I look at the notes and then I see, okay, every once in a while, we have some big 8:30 Eastern Standard Time news going on. This has such a huge impact on what happens over here. I think everybody's aware of that. More times than not, this is going to affect our decision-making over here. Post pre-market, I don't know what happened there. Elon Musk Starlink is starting to go down. I wonder if they're burning his satellites now. Wouldn't that be terrible? There's some crazy people up there in space starting to try to burn his satellites, like his car dealers. Poor guy. He's a great American. Great South African American. Lost my train of thought. I had the additional notes. Rejection, could not take out this catalyst, but I made the note. There's another thing I want to go back because I kind of study these notes. Well, what happens? Because this is all opening range. Well, on these same days, what does that second hour look like? So it'd be so easy to come in here, just create a new column and just look at, hey, how many opportunities are there to fund an account if I was to wait 1 hour? I don't want to deal with that first hour chop. You know, then you can apply same approach, you know, waiting 1 hour. 30 minutes. You want to leave that first 30 minutes alone altogether. There's a lot of different ways to skin the cat. Here I've got anywhere from 3 minutes on up to 36 minutes. This is where there's generally a lot of indecision, high wicks. There's no clarity, usually above and below. Well, today was a perfect example. We knew we didn't have any direction for that first 30 minutes. And we also knew that at 30 minutes, we were going to have the news catalyst. We were going to have the new home sales come in. So that becomes, it was very easy to sit down when the market opened today and look at that indecision and not have a clue what direction it's going to go, and knowing I don't even need to care or worry about it until after 6 o'clock my time anyway. And that's just because I knew the news was coming. So any questions? Was this valuable? Do you like it? Are you going to do it? You're going to fund some accounts? Love some feedback.
Yeah.
Yes.
All right. Share your results. I'd love to see next Tuesday when we come together. Well, I do not want to actually, don't do it that fast. Do your homework first. Do your homework first. Make sure you've got your reason for getting in, the conditions that must be present, locked in. And Sean, I know you're not with us physically right now, but I know you are in spirit. And again, get your chalkboard out and write those rules down 100 times on a chalkboard. You know, and I'm just being facetious. And I love Sean, and he knows it. But that's how important. Where's your VWAP? You know, if you use VWAP, which EMA are you consistently using off your double bottom, hammer, shooting star, trapped bear, trapped bull? You know, define that and write it down on a chalkboard 100 times. You know, and I just say that because that's how important it is to be consistent with your entry criteria. Here we're starting to say, hey, I don't have exit criteria based on, I want to see how long I can stay in the trade. No, we've got a trailing drawdown. We've got a specific objective to fund an account or hit a 30% target based on a larger size. This isn't the 1 and 2 micros on the $1,500 drawdown. This is much larger than that. But now it's like, hey, 75 points on this particular account size. And again, 75 points, I just use that based on, well, you can see 75 points is very consistent, but the math was there for me. That's what kind of the light bulb moment. Like, wait a minute here. Why am I spending, 3 to 5 days to pass an evaluation when I look back and I'm like, good grief, that's 5 accounts that would have been funded over the past, 7 days. Again, it's taking advantage of that volatility when it opens. But I don't want to say, hey, by next Tuesday, share your results. No, by next Tuesday, be able to say, I did some great homework. I'm almost dialed in to what I want to do. That's really what I mean to say. Make sure you're dialed in, you're comfortable, because the hardest thing about any, again, this is not a new strategy. This is you employing your current strategy, but from a, I'm going to get it funded perspective. So amount of size is going to go up relative to the account size. 50K accounts, 5 micros or 1 mini is actually extremely large. However, there's a lot of folks who do that because they scalp very well with it. They're in and then they're out. They're predetermined targets already that might be 15, might be 20, might be 25 points. And that is excellent, to get in and get out on some of those accounts, especially when they're already funded. But here's just a way to utilize your current strategy, understanding it's like, wait a minute, if I increase my size, I understand this time of the market, very rarely does it not go 75 points. And my risk is far larger than what I normally do anyway. I'm just going to kind of let it go because my homework, my data, historical data suggests that, hey, 7, 8 out of 10 times, I do not have that intraday drawdown to break the account before I actually hit 75 points. You just need to see that. The homework is the most important. Homework is the most important. So that's the challenge, is for everyone to do at least a minimum of a whole month, understand the nuances. What's the difference between the time? Where's your VWAP? How are your moving averages positioned on your entry criteria? Are you consistent? And then under that consistency, what's your win rate? What's your win rate look like? So good luck. Wish you all the best. Let's see some funded accounts. Here's a way to fund an account in a day. And really trade the same in your PA. Again, look at that 30%. You just fell right in line with the business model and set yourself up for success, trading exactly the same in a funded account as you would to pass an evaluation on the same day. To me, that's huge. That's huge. So, all right. So Lana, I can't wait for you to get like 5 more funded accounts.
I'm gonna have to rewatch this video because it looks interesting. But I did fund one account yesterday with my bot. So,
Good for you. Good
but
deal.
it's the only one that I have right now.
Using
So
one of those mega ORBs, mega
it was
snapbacks.
Mega Snapback that did it, yeah. But I have issues with Ninja Trader disconnecting all the time or like not updating the numbers. Like I don't know what it is with Ninja
Are you
Trader.
using a server or are you doing it on your
I
local
do
computer?
VPS and
Yeah.
this still does that, so I don't know what's going on. I may have to like uninstall it and reinstall it and because those are the only issues that I have because the bots are doing great. It's just the
That's good.
connection sometimes is faulty.
Yeah, I find it interesting because I use the forexvps.net also, and
Mhm.
I actually am running into issues where I'm losing connection.
Yeah, all the time.
And but if I run it on my computer when I'm sitting during the day, I don't lose connection. So I'm like, and that's the whole thing they advertise for, forexvps.net,
Yeah.
guaranteed connection, and they are geared towards traders and latency. So
Mhm.
and it's far worse now than what it used to be. That's the challenge that I've got. So
Yeah, the same thing. Well, my computer at home had issues too. Just the internet was sometimes it would go down and then it would lose connection. So that's why I got VPS and that's doesn't seem to be working that great. But I like how I can connect to it from my work computer when I'm at work, which is really nice. It's like a remote desktop, which is awesome. So I can kind of check on it.
yep.
But again, it's still frustrating as heck, that it keeps disconnecting.
Yeah, it's bot automation is cool, but it still can really
Hmm.
demand a lot of your attention, you know.
Hmm. Yeah.
And it's kind of geared to where it's not. You kind of set things up and go about your business and
Yeah.
go.
So that's why I still want to do like some manual trading. Like I've been kind of like doing paper trading on Trading View a little bit. And today, so I have a couple of accounts that are going to be due for renewal next week. So I'm like, I'm just going to either blow it right now, trading manually, or I'm going to fund it. So we'll see.
Well, you're laughing when you say that, but there's
Mhm.
nothing probably more important than, however you're tracking your accounts. Like myself, I've got when I open up a new account, I keep that renewal date on that account. And if
Mhm.
I'm getting anywhere near close to a renewal, well, that's where I'm gonna go ahead and blow it, or I'm gonna pass that evaluation, no later than the day prior. And Anthony has
Mhm.
shared that with us many times over. I
Yeah.
mean, it's free. And this
Free
is where,
reset. Hmm.
if you've got a few days remaining, this is where you can come in and practice something like this. It's like, hey,
Hmm.
here's my rule book, but I'm not take the emotion out of it. Get in. It's like, hey, I'm going to do it. If you got like 5 days remaining for your subscription, well, what happens if you have three, winning days? I mean, if it's a 25K account, well, one day maybe get your drawdown back. Day two, got my drawdown back. Well, now I'm going to actually pass the evaluation. You
Yeah,
know,
my problem is like I can't trade at open because I usually take my kids to school, so it's like it's never possible. So it's just kind of what it is. So I have to do it right after.
Well,
I
what you
try.
could
nice you
do,
mentioned that.
well, I was just gonna say, you could set your entry, your stop
Hmm.
loss and your take profit.
And just walk away.
Yeah.
That's true.
I mean, if you look to the left and you can see glowbacks,
Hmm.
um, and then depending on how much time beforehand that you do your entries, you can have just as much success. And the other thing is when you have a few days left, you're not looking to say, hey, I'm going to blow the account. You should be thinking I can be a little more aggressive with my
Hmm.
entries, right?
That's true.
I and you could say, hey, look, instead of me being cautious and trying to maintain the account, I can trade some higher, micros or minis. and do it that way, but you're not going to abandon your criteria the way you typically trade. You're just going to be a little bit more aggressive. That's all.
Yeah, true.
And probably one of the biggest things, Anthony kind of alluded to or caused me to think it that way, but you know, you gotta look back now. We're going back from like 13 of March. And so again, where you're going to put a take profit or stop loss in, okay, where are you most likely going to be successful, on the shorts or the longs?
Longs.
Yep, here are the shorts were in charge. And it's like, man, we'd have a lot of bullish moves within every one of these days, but it was just amazing how it just would hit that double top and just roll over, and we would continue to make lower lows. And then all of a sudden, now it's the opposite. Here's even a bear day. Let's look at 18 March real quick, and I'll let everybody go. I apologize. But 18 March, I'm just kind of speculating here, but it's like, hey, the majority of the moves for the past couple weeks are you're just going to be more successful if you look to go long, period. So here's 18 March. So yeah, opening range. But instead of, even though we're below this 1 hour 50, I mean, here's assessed low of the day. So you get in here and then walk away. I mean, you're, you know, if you happen to able to get in anywhere here with a good stop down in this area here, this is the only real strong bear day we had, but it was done within that first hour. And so now it's to the point of, I'm not going to be trading against bigger money that second half of the session, because day in and day out now we're just seeing, boom, we're getting a little bit higher there, you know, higher there. Okay, here's an example where, hey, but it was so strong initial here anyway, so everything was just kind of retracing, coming back. But again, any of these lows, all your longs are far more frequent. Long. Okay, even if we come in, get back here, we still come in and took out all these highs here. So again, long is you just got to recognize that, and we recognize that from this larger time frame. And that becomes probably some of the most important larger time frame analysis we can do is we've got to kind of, and again, it goes back to, here's my short-term moving averages, but 5 EMA on the daily, I don't have a single candle closing above that. I've never looked at or studied or done any swing trading by 5 EMA, but dang, you know, now we're coming where we're breaking above it. So from a larger time frame analysis, hey, if on a daily time frame, if we're above this 5 EMA, hey, I'm only going to be looking for longs, because even on these bear days, yeah, opening range, beautiful opportunity there, but it's like any follow-on trades, I want to start looking for that low of the day and assessing it, and then I'm going to go long the rest of the day. Same thing here, probably. So anyway, I just share that because Anthony, what he said, you know, hey, just put your stop loss, take your top profits in there. Absolutely. Based on this larger time frame analysis, you're going to give yourself much higher probability. In other words, since 13 March, we can assess the low of the day fairly early in the session, and then you can't lose. You know, other than that intraday drawdown. You know, but if you're locking in those, setting a target back up at VWAP, or, you know, even if it's 25 points, you know, say, I just want 25 points. I think I've got low of the day. You walk away. You might have 25 points before your next lunch break. But anyway,
I just actually, I'm experimenting with copper. So I just set up a one long and it took profit. Should have set it higher. It was like 1800 on one trade. If it was a small account, it would have been funded, but it wasn't.
You know, I didn't want to really go into too much of a strategy today, but under that, hey, only looking to go long mindset. Okay, here, choppy news. here's where my moving averages, I get the closing of this candle here. I'm long, okay? Well, in a normal trade, you know, I hit my target right here, but it's like, hey, kind of that crossover. It's like, hey, I'm done. I'm not even worried about trading short here. Now, is there opportunities? Yeah, but it could bounce here and go up. This could be consolidation that bounces and goes up. But what I do know, my white, see how I'm continually below the red? Well, now I get my white back above the red. So I'm just getting in here. Well, there's another, you know, 40, 50 points just following that rule. I'm only going long, you know, and then it's like, okay, I get out. This bull's getting trapped. I come back down, I'm below, and then I got this sideways consolidation, you know, and I'm above my 15-minute. Oh, look at this. I'm closing above this white line again. It's following through my red. Another short scalp all the way up to my 5-minute. And then ultimately, the big trade is if we're getting out there, well, here's all kinds of different opportunities to get in here. And this is where you just kind of stay back in, and we come in and take out all the previous highs of the day. You know, so again, it's just, hey, white line above red and nothing else. I'm not worried about shorting. You know, I exit when there's traps, you know, at the highs and homework, you know, I come in and I look at this one here. I get, let's say I don't want to, pretty high already. I got 60 points, shooting star there. This bull right there. Maybe that's why. That's very conservative. Here, I'm getting in above my white line. It closed, kind of watched a retest there. I'm believing I'm going to break through the red. And again, I get out when this bear candle traps this bull candle. Well, there's another 29. And now I look at the same thing here. I see all this consolidation right here. I'm above my white, above my red coming in. And again, I just set a target for the 5-minute, or again, when this trap comes in, but just 60, 30, there's 90, there's 113 points right there. And then again, I watch it, I'm below, my white's below, it comes back. I kind of want to wait for this little retest there. A lot of times I would like to, when I get that, then generally it's bigger. But right here we're trapping. And again, do I just want another 25 points? How can I make sure my drawdown's all maxed out? Exit criteria really doesn't happen. Just because I'm running out of time on the market, but I would just set it for right there. So there's a 113 plus 47. Simple. What is it consistent? I got a fast moving 5 EMA, and then when I have, and I'm only looking to go long, and when I have bull candles close above that, back above that 5 EMA, and it's breaking above my red line, the white line is, then I'm gonna go long and only gonna go long. And I don't even worry about catching these. You could scalp in here, but again, I have to fight my red line and my green line, VWAP. I'm above my 15-minute, I'm above my larger time frame one. So I am actually focusing on being disciplined and just trading one way, and it is a lot better. I do better just focusing on, hey, if overall market's bullish, don't do the counter trends as much. Not saying I don't, but I definitely don't copy trade, and I definitely don't do more than one account at a time. And I generally just set 15, 20-point targets. I'm not going to stay in until there's a trap. I just don't do as well, not in a bull market. But that's just an example. Example of, hey, I've written down those rules. I got my chalkboard out. I wrote them down 100 times. And I don't think I've ever really shared the 5 EMA. This is new, but again, I've got this thick white line, 5 EMA, but it's the average. It's not the high or the low. I mean, it could be. We could come in here. I'll just kind of show you the difference real quick. But if we have a 5 EMA on the close, there's not a big difference. Oh, did I have close on the last one. I want to do high. And I want to do low. And then what color are they? Low. Let's make everything white. That way you can kind of see that band. That is the difference between this is a 5 EMA low, 5 EMA high, but here's that HL2. I always want the average of the two. And I'm like, dang, I do like it better. I like it better. This comes from the Ichimoku, some of the math behind some of those moving averages. If anyone's heard of the Ichimoku cloud.
Ichimoku cloud, right?
Yeah. If you've heard of any of that, I mean, that's where a lot of their lines come from, are the averages of the 12, the 26, the 52. But I am gaining a lot more comfortability with a faster 5 EMA. And here's the only reason, everyone, full disclosure. The reason is now the relationship between this thick white line and my persistent 1 minute 50 SMA. I love that relationship. So the low, the high, let's get rid of those. But this relationship, this 1 and this 5, that's a great relationship also. But I really like, so I see this consolidation here. Even though there's scalping opportunities here, I'm still waiting. Just like Kevin, you and I talked about how many times we're kind of waiting for, we're above our 10 EMA. I kind of like to see that double bottom or that retest. We kind of got it here, which is a reason to go long here. But then it kind of comes back. It's down below it one more time. But when this right here can't take out these lows, there's your real reason, in my mind, to, hey, if I can grind through and get above this 5 minute here, now look at the white above the red, above the green, above the wet. So anywhere in here, this is what you're waiting for all day. Here's the actual trade of the day right there. But it's based on this white line, 5 EMA breaking up over this 1 minute 50. And again, that's no different than a 10 EMA and a 20. Price action, as they behave with your moving average of choice, is going to give you the same results. But if you look at my charts and they look a little different in yours, here's the logic behind it. Here's why I've migrated to a faster moving 5 minute EMA, and to be able to understand its relationship to, again, the 1 minute 50 SMA, which I really, really like. But to bring this in just adds, again, it's that I'm breaking bull candle, wicking off my 1 minute, but still closing below the white. When this candle closes above this white line here, especially on the white line bottom here, white line pulls back, high or low there. Here's my reason. Here's my confirmation. Here's my execution. This little wick, it's real short-lived. So yeah, I'm right in here. Boom, gone. And I just repeat that over and over. But it doesn't matter if you've got a 10 EMA working, whatever. Are you consistent with the reasons for getting in? And do you have a reason consistent for getting out? So, all right, I'll leave it there. Again, I'll get this processed and dropped into our group tonight. But I know a lot of folks had to drop an hour ago, and I keep talking and talking. But thanks for listening to me, y'all, and letting me talk and talk and talk. I'm in Alaska, and I spend most of my waking hours in my basement with my stapler. So you're my interaction with the outside world.
No, we appreciate you, Jay.
6 miles a
Yes,
day
thank you.
outside.
Thank you.
All right. Y'all have a great rest of your evening and week.
All right.
Thank
You
you.
too.
Dude.
Bye. You too.
All right.
Take care.
Bye.
See you, bye.